of Roku down 14.5% in overtime after missing earnings expectations in today's report. Joining us now to discuss, Ken Leon, Director of Equity Research at CFRA. Ken, profit forecast and the ad market really dragging here down to really last summer and fall's levels. How bad is it?
Hey, great to be with you. So the disappointment on Roku is really more company specific. They're on the right side of the secular trend to streaming from linear networks, but they only had a disappointing net add of subs of 4 million. They had 25 million in Q3. They also had a drop in what's called average revenue per user, or ARPU, down to $39 from $41.42. First quarter coming up for 2024 is the weakest quarter, but the guide is higher than the street on revenue, and they're going to have positive with EBITDA. Put it together, it was really kind of a nebulous outlook of guidance, and also the disappointment why the stock is down after hours is really these net ads. So you bring it to the conference call at 5 o'clock with Anthony Wood, CEO and founder, is really to give comfort that the net ads will accelerate versus compress. And really, John, having continually only 3 or 4 million net ads suggests that Roku is not a growth stock anymore, and the future years you can't extrapolate big numbers, which the street does.
Okay.
So I think that's the concern.
So is this a buying opportunity, given that maybe people were already positioned to be negative because of the Vizio Walmart headlines and possibilities, and the excitement is not big over the advertising space. People are paying attention to AI, or is this the shine just beginning to come off of this as a growth stock, and so there's a lot more downside possibility from here?
Yeah, it's probably more the latter. I still think Roku has opportunity because they have a great operating platform. So many streaming viewers would like to have a unified way of really flipping channels. But at the end of the day, they're not of the size of a Netflix, nor do they have open field running in music like Spotify. So you put them really, John, as second tier, where they have to demonstrate that they can still drive growth. And I think that's going to be the debate tonight on the call and what we see when the stock opens tomorrow morning.
How much does it matter when we get reports surfacing that Walmart might be buying Vizio? When we talk about the smart and connected TV market, I mean, we know competition's been increasing in general in recent years. Is that still meaningful?
I can't tell you how many times during the holiday season I would go into Best Buy and I'm looking for Roku TVs, which is another way to drive kind of incremental growth. And it's really was not that significant. I don't think it's a Hail Mary for Roku, because at the end of the day, it's going to be subscribers that really drives their business model. And for Walmart, Vizio is probably smart because it's a higher margin than just selling food. But I think for Roku, again, if they can demonstrate that we're a great pure play on streaming, they have to have much higher net ads each quarter, certainly something north of 10 million.
All right, quickly, with the stock down 15%, do you buy here?
We still have a hold on the stock. And again, this is not a company that has open field running. Mm-hmm. There is competition, and we want to hear what the founder CEO has to say tonight.